Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 7th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session and the week ahead. Here's a look at the daily time frame of the ES. Right now, what you see is price has staged a solid comeback after bouncing off of the bottom of the key range down here. You have between 1804 and 1814. That zone was a big time area of support for us, and we mentioned that we could see a bounce back toward 21, 39.5, and 50.5. We got that target, and once that happened, price pulled back into 1921s, our last ditch effort for bulls to defend, and squeezed into the 25% upper key level at 2007. That was very important to us, and as we mentioned in the trading room on Friday, if you're going to look to sell this market, you have to wait until about 2007. That ended up being the highs of the week. What you're also seeing now is how price has formed higher value relationships week over week here with the pivot range. You can see the pivot range has been walking its way higher week over week here. That's very indicative, obviously, of a bullish trending market. Typically speaking, any pullback to the pivot range in an uptrending market is typically an area to defend for another round of strength. So right now you can see price closed above this upcoming week's pivot range and also opened above the current week's pivot range and is currently being defended off of the previous week's close. That implies any pullback into this pivot range could offer a buying opportunity for another round of strength to the upside. I would say 1968 offers a very important retest key level here because that is the previous month's high price. That's also well within the weekly pivot range here. So any pullback into that zone could be a high probability opportunity for a fade to new highs into 2018 and perhaps beyond. Any failure to hold above the previous month's high here opens up a rotation back into 1921. Obviously, we've continued to follow this large key range here that builds out from 2075 down to 1804, the midpoint at 1939.5. Again, this key range has been very, very useful to us over the last couple of months here. And overall, if price can continue to hold above the midpoint of that key range, the expectation would be for a follow-through into the top of the key range at 2075, and that would also match the HVN at 2071. So right now, that's kind of the longer-term target here if bulls can keep the previous month's high bid. Now, if we take a look at the intraday time frame here of the ES, one thing you'll notice is our key range from Friday here turned out very, very solid. Obviously, what we were looking for here was how was price going to respond below the bottom of that key range. It was unable to make new lows, and when price pushed back above the bottom of that key range, it led to an auction across the range to 2002 half. You can see here our 2007 key level was the high of the day, and price subsequently pulled back and is now retesting those recent support levels. So right now you can see short-term prices are pulling back. That could imply at least a retest of 5-day VPOC, which is 1976, and a potential push into the bottom of value on a 5-day basis, which are the 1968s. Again, the previous month's high price is 68.75, so if price is going to pull back into the bottom of value, which coincides with the previous month's high here, that could be an area for bulls to defend for a shot at a swing push to new highs the rest of the week. Any failure to hold above 68 opens the door to rotating all the way back into 1929s. Taking a look here at crude oil. Here's crude oil in the daily time frame. This one turned out to be much more bullish than we had expected. We were seeing how price was basically holding at the top of value, unable to see any acceptance beyond 35s for some time, and then the stops came out and this thing rallied through 36s and is now trading 36, 56, very, very bullish. I mentioned if price can get through 35.25, the expectation would be for a test into 37. 37 is a major, major level because of its LVN. That's a significant LVN above. That tells you right there that there is some rejection at that level. I would say any test of 37 could be a first test fade opportunity for a rotation back into 35.25. Overall, prices have been trending higher, so pullbacks into 35.25 could offer a buying opportunity for another attempt at squeezing higher. One thing that's very, very important to note here is how prices have been trending lower, obviously, for many months now. We have the monthly pivot range being lower value month over month, and you can see the pivot range was lower value heading into March as well. However, price closed February above the upcoming month's pivot range and has opened above it and taken it bid. Anytime you do that, that is an indication that the trend has changed. So I would say any pullbacks into 33.44 could offer an opportunity to defend for a squeeze and a push into the 40.50 level, which is the top of the key range. So we could be looking at a nice markup phase into the top of the key range. One level to keep in mind is going to be that 37.57, obviously 37s as well. 37.57, this zone could offer a first test fade as well back into 35.25, as it is the inner 25% key level, and that key level can have a high opportunity fade potential right in that zone. Now if we look at the intraday time frame for crude oil here, what you'll notice is price is trading within a very tightly coiled range over the last overnight trading and heading into RTH from 36.26 up to 36.72. That narrow range here could offer some expansion opportunities to begin the week. Failure to hold above 36.20s opens up a retest back toward 35.93 and as low as that 35.25 key level. Above 36.72 has a big time test at our 37s here. That's going to be important. 37.27 is also going to be the 25% weekly expansion target, so watch that level as well, as any push into that level could offer a first test fade. So 37, 37.27, some upside key levels to watch out for. Failure to hold above 36.25 rotates back into 35.93 and 35.25. Looking at gold now. Gold has had a significant trend underway. Obviously, we've pushed through the top of the key range at 1263.90 for the first time since its development in February. Now what we have to see is obviously we have a higher value relationship here. The pivot range should be defended in this type of relationship for a continuation higher. I would say if bulls can keep price above 1248.5 here, the expectation would be for a continuation higher into the 100% expansion target for the month. This is the ADR target at 1301. So we had, if price could push through 1263.90, our upside targets were 1282 and 1300.1. We nearly got the first target here. I think this pullback this week, if defended, again, as long as price can hold above 1248.5, the expectation would be for a continuation into 1300.1 to 1301.60. Taking a look at the NQ now. Here's the NQ in a daily time frame. This one is very, very intriguing here. We have a very clear trading range that is basically developed from about 4,300 up to about 4,355. What's important about this key range, obviously we had a significant reversal off the lows here. When price failed to hold here, the expectation was for a quick move into 40.85 with the potential to see the top of the range at 43.09. We completed that move last week. Now, prices attempted to hold and then actually closed above the top of the key range here at 43.09. This is important because if there's a failure to see acceptance above that level, we could see price auction back into 42.01 with the potential to see the midpoint of the range at 40.85. So this is going to be very important to see how we break free from this range. As of right now, bulls want to keep 42.86 bid for a shot at seeing further expansion through 43.57 and into the next upside key target here, which right now is going to be about 4,400 to 44.05. That HVN right in that zone is the next upside target to reach for if prices can remain bid off 42.86s. So if we look at the intraday time frame, you can see how significant this range has been. A wide-ranging trading range here. If we go into a higher periodicity, you can see how prices have been coiling within that range for some time. Again, 42.90, 42.86, failure to hold that level, auctions price back into 42.26 with a shot at seeing lower prices into 41.80. If we can see, if bulls can continue to defend 42.96, the expectation would be for a rotation back into 43.55 with potential expansion into the next upside target of 4,400. So right now we have a very clear range to trade from. Anytime you have a range of this magnitude, the expectation would be for bulls to defend the bottom end of the range for rotations higher, bears to defend the top end of the range for the rotations lower. Expansion out of this range could be significant once it occurs, especially on a multi-day basis. So continue to watch the edges very closely. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and happy Monday.